Let's also look at Shopify here. Shares moving lower dramatically here as we've seen trading commence. Shopify shares down 17%. This is after they had recorded their first quarter financial results and reporting total revenue in the quarter of $1.2 billion. And that is against the expectation, $1.25 billion. EPS that came in light against expectations. That was 20 cents a share versus the 64 cents a share there as well. I mean, at the end of the day, the subscription solutions revenue, that was probably one of the only bright spots here. That was up 8%. But I think outside of that, it's coming back to the merchants. How are you able to continuously sign up more merchants and more platforms? When they were able to run away with some of those platform partnerships with the likes of social media companies trying to drive more of that marketplace experience, it looked great. But now, if you see less of that purchasing activity taking place through those platforms, that's something that can immediately hit on the number of additional users who are saying, all right, I'm willing to shop in Instagram or in Snapchat, and that hits on Shopify directly as well.
Right, and a lot of these, the cracks in these business models really got covered up during the pandemic because everything seemed fine. Now, Shopify, it's a good business, nothing wrong with that, but you look at monthly recurring revenue, look at subscription revenue that you mentioned, gross merchandise volume, everything's slowing. It's slowing across the board, and the market, I think, forgot that life will exist after the pandemic, and that will mean slowing growth rates for all these e-commerce type companies.
Yeah, I mean, Shopify was super, super hot for a long time, and the growth was super hot. And this assumption that it was going to continue to be, to your point, well, I think
wake-up call.
Mistaken, and then some.